Let's talk about some of the big movers in the market. Once again, it is all about the bonds. Scott Bauer is the CEO of Prosper Trading Academy, joining us from the CME down here in Chicago. So Scott, first, we got a little bit of a reprieve today because we've got short-term yields rallying as well. So not a lot of inversion, paranoia today. But 10-year is just nonstop. It's just nonstop. How do you trade it?
You know, I completely think this is an overreaction right now. I'm not saying that, the inverted yield curve that everybody is talking about is not something serious to take into consideration. But to me, Oliver, remember our talk last week about Boeing and the overreaction and we had the same talk about Nike with the Zion Williamson thing, market emotion, market overreaction. I think we've seen that here. I'm not saying that I expect a rally back in terms of rates here or a sell-off in the bond market. I'm not saying that I expect that, but I absolutely look to see that this momentum in rates to the downside really ebbing here for quite a while.
Okay. Now, do you really want to get in front of this train though, Scott? You want to, sell bonds here? I mean, haven't we learned? After
there's plenty of ways to skin a cat. There's you can get into this space.
The cat bites back, Scott.
Yeah, but you don't have to use futures. You can go out into the option market like something I did earlier today. And now it's not an exact correlation to the 10-year, but there's an ETF, the TLT. It's the 20-year, right? It's not an exact correlation here. But man, this thing, you look at the chart on that and it's skyrocketed. Just, as rates have gone down, this thing has skyrocketed. It's coming up to some pretty decent resistance, just as the 10-year is coming down to some pretty big support going all the way back to 2015-16. There's some really decent support here. Now, yes, times are different and the economics, the economic landscape is different. But you know what? You can play this. You can be in this space here. And I'm buying a put spread in there because I think we've come down too far, too quickly. I think that the bond prices have risen too quickly here, and I'm buying a put spread going out to May because I think things are going to calm down and we're going to back off a little bit.
Yeah. All right. So you're doing the put spread on TLT. Hey, what about buying TBT, which basically does the inverse? It shorts the bonds for you basically. I know some people like to think these get a little bit too complicated. Some of the ETNs and stuff that deal with fixed income. I mean, do you have any of those concerns, or would you do it like this? Just buy an outright of a share?
You know what? I like using options, and I like the TLT space because, like you said, do I want to get myself in front of a freight train? Absolutely not. But I'm totally risk defined here. Okay, I'm buying this put spread based on what I see as some really good support down at that 10-year based on market emotion. If I'm wrong, Oliver, I'm wrong. I know what my risk is. I'm stopped out. I can buy this put spread for like 50 cents. I'm looking at a $2 wide put spread going out to May. So I think this is a really good way to be the contrarian in the marketplace and take advantage of an opportunity that shows some really, really heavy reward to risk.
All right, let's talk energy here for a moment, Scott, because I want to follow up with crude. It's the down mover today. We got an inventory report that is basically the opposite of the giant draw we got last week. You look at it over a couple months, it's been pretty solid, pretty consistent. Oil has also been consistent in its run. Do you want to trade this right now?
I do, and you and I, how many times have we had the conversation about the EIA API reports and how, quite frankly, I don't want to call them irrelevant, but how wrong they've been, and the estimates for both couldn't have been more wrong again, right? Both of these agencies were looking for a big draw. We actually got a build, right? So we see oil trading down a little bit today. Now, that being said, I do think there are some tailwinds behind the oil space here. I think we could, easily break back up above 60, but I really see some major resistance coming in upper 60s, meaning like almost towards 61 here. So yes, I still want to play this range that we've been in, albeit we're at the top of that range, but that range of 55 to 60, 55, 61 here, yeah, I'm shorting it here.
All right, there we go. Scott Bauer, I like it. Nice energy and good trades today, giving us some specifics on two big asset classes. Yes?
I got to add one more thing. Listening to yours and Tom's discussion just a few minutes ago, there's nothing plain vanilla, and you always have something to add.
There we go. All right. Guess we'll have to take a rain check on that one. Scott Bauer coming to us from the CME. He's right, though. I do always have something to add.